Welcome back to the channel. Welcome back. Today is the first video of the new year. So I'd like to start by saying welcome to the new year. Happy New Year. And I hope you had a great start to the year. And I hope you had a great 2022. However, we are now in 2023 and we need to get busy. So let's get back to these charts. So I took a little bit of a break, a much needed break. Started trading 2022, and since February I've just been on the charts learning and applying new strategies that I was learning. Finally found a strategy that works, and this is what I've been working with for the last few months. So getting back on these charts, I wanted to review what I've done previously, what worked, and how I would like to progress in this year, because I'm trying to make this a very big year for me. 2023, I'm going to make it a big year because I'm trying to find consistency in this trading, in trading Forex. So to do so, I had a look at what I was doing previously, and it's my strategy, supply and demand, if you don't know. And what I was looking at previous videos is how to trade it on different time frames. So I was looking at daily, and for those who watch these videos, you know typically I take scalps on the on M5 price action. So looking at daily, looking at M5, and I tried to figure out what makes sense. So that's what we're going to be looking at in this video. We're going to do some back testing, and I'm going to show you how I find entries on the daily, and I'll show you my strategy on how I apply it on the M5, and hopefully we reach a conclusion and we'll see what is the best approach moving forwards. So quickly on the daily, we're on the Euro USD here. If you go to the daily and you zoom out, you can see what's been going on for most of the previous year. So since since January 2021, 2022, it's just been selling off, and it's obvious why, because we've had COVID, and then we have had issues with the the Russia-Ukraine war, which has affected supply chain issues in euro, and that's led to the sell-off in the euro. Okay, so it hit to this point here, and it's just been turning around, and that's what we're looking at now. We're looking at a current uptrend with the euro, and it's trying to gather back most of its losses. So that's where we are in terms of price, and that's what price is doing. So if it's on an uptrend here, let's see, what we're looking for is really how can we jump into this on the daily and take price back up. Yeah, so a lot of people may be bullish on the euro, and based on this price action I can see why, but I'm not really looking for fundamentals here. I'm looking at technicals. So here I'm looking at what's been going on in terms of price action. So that's what we're going to look at today. So here we are. Price got to that low, pushed up here, hit a supply zone here, got pushed down, hit this demand, got pushed up here, hit a supply, got pushed down, and it's just been doing that all the way through. So it's actually trending up. So we're going to look for entry in this trend to continue taking it to the upside. So if we look closely here, you can see the trend, how it's been formed and how it's continued. So if we look at this high here, when it hit this high here, it got pushed down from that supply zone and it went into this demand here. Yeah, at this point here, hit that imbalance candle there on the daily and got pushed up to that supply again, tested it, and it got pushed down again. So it didn't break it, it touched it, didn't break it, it got pushed down again. And it got pushed down to this point here. Once it hit this point here, in this zone here, it got pushed up and it beat it. So it then created a new high here. So hit that supply, which is on a higher time frame. If we look to our left, hit that, it's got pushed down again to this. Well, it hit that, it got pushed down to this demand here. Mark that out. It's actually that demand here on this imbalance candle on the daily again. But let's just leave it for here. Got pushed down there, got bought up again, and it beat this previous high here. And that's what it's been doing. So if I was looking for an entry, I'll look for that pattern to continue, right? So before I do that, let's just zoom in a little bit and see exactly where price is being reacting to. So what we have here on this left here is we have a base area before price got pushed up. So this is where price was agreed. Sellers and buyers were in agreement here. Hold on, we're on live charts. So sellers and buyers were in agreement here in price. And at this point here, on this candle here, there was no agreement. Price was just bought up aggressively and it just pushed up higher. Okay, so that's an interesting area. That's a key area for us where price was bought up. So I'm just gonna mark it out here. Yeah, just gonna leave that here because we know previously that's where price got bought up and they took it up, right? So we're looking for that zone again. So what we got here, if you look, we've got the same pattern here. We've got the base candles here where sellers and buyers were in agreement, and then we have an imbalance candle here which pushed price up. So again, something in here, price action in here led to this push up here. So if we move this down, you can see again it's right here on this imbalance candle where it got pushed up. If you look to the left here, we've got a pattern. It hit the previous daily high here, and that's where price reacted here. Now it hit the previous daily high here from the base candle again, and that's where price reacted when it got pulled back down. So it hit this zone here, got pulled up again and moved up, right? So that's where we are in terms of price. So that's what's been happening. So if I'm looking for an entry for this next zone here, this is our low. So this is our base candles here. Got one here and a buying candle here, and we've got imbalance here. It didn't really move aggressively. So do we use those? Yes, you could have, but there you go. You could have used it there. But what I'm really interested in is this imbalance candle here. Okay. So if I take this and leave it here on the previous high where it beat, you can see now it continues this pattern. So price action got pushed up here, came back down to this imbalance candle, hit this zone here, which for those who trade support and resistance, this is where you'll be looking for entry. Hit that zone and it started buying up. Now we are well. This area is in December, so we wouldn't expect much price action here. As you saw previously, it's been moving quite aggressively 3 or 4 days before it breaks the previous highs. Yeah, but seeing as we're in December, prices slowed down because of the holidays. It's taking a little bit longer here. It's almost consolidating. It's been wicking a lot, and this is why I didn't trade during the holiday. So that's where we are in terms of price now. So that would have been an idle entry for those who traded it, and you're looking to take price to this previous high up here, right? And that's how I would trade this move. So if I was trading, I would have looked for an entry around there and try to take it up there, and that would have been a 150 pip move. So that's how you could have traded this move. So what I'm going to do now quickly is go down to the lower time frame and show you exactly what that looks like. So you can see exactly what we're looking for in terms of entries. So I've marked out the zone, and this is what we're looking for here. So let's go down to M5 and zoom out a little bit. And I think it was on the 17th of December actually. So let's go this way. Gonna have to bear with me a second. I should be able to find it soon enough. So we're in November. Okay, this is taking too long. I'm not that patient. So alright, so we are now in December. We're looking for that zone, that key area where price reacted to, and I just want to show you what it looks like. And you could backtest this yourself, and you can see it's very similar in the previous examples I showed you. So this is the imbalance candle where it pushed it up. This is our zone that we're looking at. Yeah, this is our entry, our key price entry. It would be 1.05812. And if we keep scrolling over here, you can see what happens. Well, price hit our zone and reacted straight away. So we know that's a key area, right? And we know why, because of that imbalanced candle. So why that imbalanced candle is important is because of that aggressive buying, there would have been some leftover orders. So orders that were not filled. So anytime price hit that, it reacted. So it hit it again here and it reacted. So I mean, this is a very effective strategy. And if you backtest it, you'll see why. If you watch my previous videos, you could probably see why I use it as well. So this is our entry point we were looking at, and I'll just show you here, the drawdown you would have got is 5 pips, yeah? And our initial reaction was 50 pips. So was that 1 to 10? Or no, 1 to 5 there, more or less, 1 to 5, initial reaction. So could we have waited for confirmation, really, is the question I asked myself. So price hit there. Am I looking for some kind of confirmation that price is going to react to that zone? And the answer is no, really. I'm not looking for any candle patterns. I'm not looking for any formations or nothing like that. You would have missed that opportunity. As soon as it hit there, it slowed down and moved off. If any confirmation I would have taken from there is when it closed on this candle here, on this buying candle here, I would have looked for an entry there and taking it up there. So that's the only confirmation I would have taken that price is looking to react to there. So you could have taken it there, or you could have scalped it. I would have scalped it to about there, 28 pips. On a daily, if I'm taking a daily move, I'm not looking for my 10 pip moves. I'm looking for price to continue the trend, and the trend in this instance would have been to beat the previous high. So let's go back to D1. The trend would have been to beat the previous high, and that would have gave us, I think it was 158 points we were looking at. So on this entry here, on this previous high, we're looking at about 157 points. So that's what we would have been aiming for on that move there. Now, for those who are familiar with my channel, for those who watch my videos, you know I don't like to hold moves. I don't have that patience, but I am trying to work on it, because if I did take a move from here and held it to 150 points, currently sitting on 130 points if I was in the move. It did take a long time because of the holidays, but if you look previous setup here, it didn't take as long. So from this point here, again, live price action, keep some join back there. So previous setups, from this low here to beat that high, it beat that high at this point here. That's 190 points, and it took 2 days, really. So for those who do have the patience to holding it for 2 days is not long to get 190 points. I mean, you could do that and be done for the month, no more trading. So it's really ideal for those who don't day trade, who maybe swing trade, who work a full-time job, and this is something you do on the side. That's a very effective way to read supply and demand on the daily, holding the positions longer. And if you are trading on the daily or the higher time frames like H4 or H1, you're probably holding trades longer to see it reach your targets. So definitely need patience for that. Yeah. So that's the example I wanted to show you on how I would trade the daily. And I'm going to go now to M5, and we're going to look for moves with the same setup on M5, and I'll show you how I would day trade using the same setup. Yeah? So where are we? Let's zoom out a little bit. So what we're looking again for is the same thing, really. We're looking for aggressive buying or aggressive selling, and once we see that, we're looking to take a trade from based on that, right? Same thing on the M5. So let's have a look quickly. So I haven't really prepared anything for you here, but I could, yeah, there we go. The reason I do tend to do this on the daily charts, or on M5, and I do trade, I do day trade, is because these opportunities are readily available. You can see them every stay. So here's one example here. So what we got here, now let's get rid of this again. What we got here is consolidation and aggressive selling. So when price comes back to that area where we had that aggressive selling, we are looking for our entry. So just zoom in again there. So consolidation and aggressive selling. That indicates that big money is in the room. You know, this is where they jumped in, they saw value in this price action and they sold it off there. So when price returns to there, I'm looking for an entry around 50% of this point here. This is my key area. Yeah. So price got sold down from there. When it returns there, I'm looking for an entry around there. Now again, I could do an aggressive entry here. My stop loss would be on top of this high here. So my stop loss in this instance would be 14 pips, which is fine with me. Typically 20 pips is good for me. 14 pips is okay. So I could aggressive entry there and I'm looking for an exit. My exits are usually 10 pips. I'm looking for a fixed exit of 10 pips, which is there, and I'm out. So it would have taken about 10-15 minutes for me to get my 10 pips and I'm done for the day. I could held it to this point here and got 27 pips, or I could held it for a higher time frame confluence or something and maybe taking it further down and got 59 pips or so on there. So that's something I do on a daily basis. Typically, I just take the 10 pips. So again, aggressive entry there, or I could have waited for confirmation. Confirmation in this case would have been a candle print in the direction I want to go. So we have our candle print here, and I entered there. And if I entered there, I waited and took my 10 pips. Again, quite easy, get that 10 pips and so on. So that's what I tend to do, and I'll show you another example. Actually, I'll show you an example I did this morning. Now, price has been very choppy this holiday, but I still was able to find a trade this morning, and I took that for 10 pips. So what we have here is aggressive buying from the previous day, and we're looking at this imbalance candle again, the same as we did on the higher time frame. So we had consolidation here, and price broke up here. It traded in this imbalance candle here and pushed up again, and it hasn't traded in this one here. I'll just zoom in so you can see exactly what I'm talking about. It hasn't traded in this one here, so that's the key area for me. So I'll mark that out for you. And as you see here in the overnight session, the Asia session, today is actually a bank holiday, so you wouldn't expect much to happen, but I was able to catch this trade using supply and demand. So price pulled into this demand here and it reacted. I did not trade this. If you don't know, you can't trade this because the spreads at this time is ridiculous. You can't effectively trade that, and this isn't my trading session either. So I didn't trade that. So I was looking at that as a key area, and I didn't know what was going to happen today because it was a bank holiday. I just marked it out and I said, let's keep an eye on it. So what happened in the start of the London session here, price hit it and reacted, and then went underneath it, running the Asian lows, but yet respected that low here. So it's essentially continuing its uptrend. So when it went underneath it here, I was actually busy. I was getting my boys ready for the school run. When underneath it there, it pulled back up and it printed a candle in the direction I wanted to go. So I entered around here. And then in this move, I'm looking for 10 pips. So 10 pips there, and I got out. Yeah. Again, I could have held it to this. If I was to hold it, I'm looking for these Asian highs. So I could held it for 30 pips here. It may get there today. Or I could held it for the previous high, which is there, 37 pips. Or if again, for it to continue this uptrend, as I mentioned, let me just zoom out. For it to continue the uptrend on the higher time frame, let's go to H1. I think we see it there. For it to continue from this point here, I'm looking for this high here. So I can hold it for a 37 pip move, but like I said, I prefer to scalp it, and especially because its price is really choppy here, I just wanted to get in and out as quick as I could, and that's what I did this morning. So that's really it. That's the end of the video. But in conclusion, as you can see, you can trade both. I clearly have a preference on trading on M5 because the moves are a lot quicker. I could bag 10 pips. So how do I move forwards? Moving forwards, I think for the best thing for me is to actually trade both strategies or both approaches. It's the same strategy, just different time frames. And I've mentioned this in previous videos that this strategy is applicable on any time frame and any instrument that has a lot of volume. That so you can't really trade it on penny stocks or anything like that because they are easily manipulated and you can't really accurately trade supply and demand on something like that. So what I will do in terms of the daily, I'll just mark out key areas that I'm interested in, and when price does get there, and maybe I'll look for a trade. I could take a scalp, whether it's a quick 50 pip scalp or I'll hold it to the next breakout point. And on a daily basis, I'm scalping on the M5 10 pips. So that is going to be my approach moving on this year. I just wanted to share that with you so you can see what's going on. To manage your risk, I don't really talk about that too much on this. Again, I think I'll address that in another video, but depending on what approach, whether you're taking trades on the daily or the M5, you do need to use appropriate risk management because on the daily, it could swing 100 points against you if you don't look for if you're not entering in the right zones and so on. Yeah. So where's price now? Where's price heading on the daily? We're looking for price to beat this high here. Price is currently, that's our current high. We're looking for price to run these highs and get into this zone here. Once it gets into that zone there, I am going to be looking for a sell. So once it gets up into this area here at 07988, I'm looking for a sell, or I'm looking for a reversal pattern. So something I need to consider in the future. But until then, I'm just going to be scalping on a daily basis. So I hope you appreciated this video. Gave you a nice, long, juicy video to start the year. Gave you a lot to think about. Price action on the daily and price action on the M5. I will be trading both. Guys, I recommend backtesting any of this. Anything I show you, backtesting it and see for yourself how it works for you and how you would manage your risk and so on moving forward. I hope you appreciated this video and started the new year fresh eyes and all that. And I hope you do stay tuned and see how I progress. And to do so, you know what to do. Hit that subscribe button. And if you did enjoy this video and you do enjoy content like this and you would like to see more, hit that like button. Show me you're out there. Show your support, and I'll keep getting these videos out to you as often as I can. So I'm going to wrap this up here. Until next time, this is Patrick signing out. Peace.